let's take a look at some more unusual options activity, powered by Unusual Whales. Today I'm asking, does someone always know? You be the judge. We're going to go over Zynga and Bed Bath & Beyond. The Unusual Whales Twitter community was quick to pick up on these flows, and it paid off big for many. The pre-market of Monday, January 10th brought news that Take-Two Interactive had agreed to acquire mobile app developer Zynga. The news sent Zynga's share price flying, from $6 a share to $9 a share. Unusual flows started occurring en masse the previous week. Here, we're looking at call activity that took place on January 6th. This tiny whale struck gold on these 6.5 strike calls, purchased at 4 cents a contract. They expired on the 14th with an intrinsic value of $2.50. But let's talk about some larger, more actionable flow. The 6.5 strike calls expiring this coming Friday were picked up with massive volume for 10 to 16 cents a contract. Note the timestamps. The volume went from 644 to over 24,000 in the span of 8 minutes. By the end of the day, over 37,000 of these contracts had changed hands. I've marked on the Zynga chart when this massive call buying took place. The historical open interest and volume data for these contracts tells us a lot at a glance. We went over the massive volume on the 6th, but there was additional massive inflows the very next day. The open interest spiked after each day of call buying, letting us know that the contracts were being held overnight. Massive call volume across other strikes as well resulted in Zynga options activity easily outpacing its normal volume on both the 6th and the 7th. The Unusual Whales alert algorithm also picked up on the flows from the 6th. The contracts were alerted at 15 cents apiece and traded at as high as $2.73 for a gain of over 1,700%. Moving on to our next unusual flow look back, Bed Bath & Beyond, ticker BBBY. Shortly after the market closed on the 11th of January, Form 4 data was released for Bed Bath & Beyond. Form 4s are required when there is a change to the holdings of a company insider. In this case, several executives had recently bought large amounts of shares. BBBY gapped up slightly and then proceeded to have a massive run over the next 2 days. Unusual flows, again, widely discussed on Twitter, were first spotted a day before the Form 4 disclosures were made public. Of high interest were the 14.5 weeklies being purchased at around 10 cents a contract. As with Zynga, we can see a large amount of volume occurring over a short period of time. In total, these contracts ended the day at 21,000 volume. I've marked on the chart when the call flow started. Back to the old faithful historical open interest and volume data for these contracts. You can see that a large portion of the volume stuck overnight and translated into a large spike in open interest. BBBY shares traded as high as $16 prior to expiration, giving the 14.5 strike calls $1.50 of intrinsic value. They were purchased at 10 cents apiece initially, which works out to a percentage gain of 1,400%. If you can't beat them, just join them. Comment below if you caught any of this unusual flow.